Hi friends, I'm back with one more video. So today we will be discussing about the customized iron condor. This is going to be like very important video and eye opener for majority of the retailers, how we can customize our own iron condor. There is a myth in market saying that the iron condor has high risk and low reward. Right? I'll just prove it wrong in case if you go for the customized iron condor. Let me take you to uh, sensible. Okay, usually one of the iron condor will take around 37,000 to 40,000 of the capital. Let me show you, right, what is iron condor. Basically iron condor is a strangle. This is your typical strangle. So the moment you add the edges, this will become your iron condor. Again, I'm telling you because already I've made a video on what is the iron condor, but just for your reference, quick reference, I am giving you a quick insight. This is your strangle, typical payoff strangle. The moment you add the buying edges, this will become your iron condor, which has maximum profit of 4,168 and maximum loss of 5,833. Loss is more and the profit is less. That's the reason many of the retailers will not go for the iron condor, but this is one of the best strategy in case if you combine it with your view, right? If you combine it with what realistic expectation you have on your capital. Okay. Sorry friends. Now what is it? Yeah, if you check the POP, the original iron condor has 63%. So what the iron condor what I've deployed is I've just taken it from the sensible by just going to the ready-made feature and just I've clicked on this iron condor. Okay, majority of the people, they'll just click on this and they'll deploy looking at this profit, right? Looking at this profit 4168. So let me show you one example, right? You will be surprised. So that's what I'm telling. See, whenever you go for any strategy, you need to have the realistic expectation. So what is your capital? 37,000. So let's say if you're about to deploy this iron condor, what consequences you have to face? Profit divided by your capital. Let's see what is the uh, percentage, right? Into 100. So you are expecting 11.2%. Take 11%. You're expecting 11% per week. So if you just consider this for into 4 weeks into 12 months, you are expecting 538% per year. If your expectation is to get this 538% in a year, you are doing more than gambling. This is nothing but this is pure gambling. If you do this, your luck might favor you 1 times, 2 times out of 100 times, but 98% of the time you will lose. So what should we do? This is not the right iron condor. We need to have the realistic expectation. So let me take you to the this sheet. Let's say give some importance to all these parameters. Stay with me for like 2 minutes. I'll just explain you what is all this breakup, right? Your capital is 40,000. What did I say? To deploy iron condor, basically it takes 37,000 to 40,000. So let's take 40,000 as a round figure, and my percentage is 1.5 percentage per week. I'm just expecting 1.5 percentage per week. Even this is huge. See, if I say 1.5% into 4 weeks into 12 months, this is 72% per year, which is also very high. But for the demonstration purpose, I'm just telling you, it's up to you. If you want to go for 1% also, even if you go for 1%, that was like 48% per year. Okay, for the demonstration purpose, let's take it as 1.5%. Let's consider that 0.5% for your brokerages and your STT charges. Now capital required is 40,000. All right, percentage you are putting 1.5% per week. Okay, profit would be 600 rupees on a capital of 40,000, which is 1.5% is 600 rupees. Okay, so ideally when you're deploying your iron condor, year that should have 600 rupees. Until you get 600 rupees, you have to keep adjusting your strikes, your so-called premiums, your buying wings, your selling positions. You have to adjust in such a way that you have to see this 600 rupees here, because that's the realistic example. That is 1.5%, but this is almost 11%, 11.5% per week. So if you get success, right, you will beat Ambani also, right? I mean, sorry for taking that name, but still I'm telling, trading is all about like low risk, I would say. Not, I would say, not high reward, it should be like low risk and also decent profit, not any like 10% or 12% per week, right? You should try to target like 1 to 1.5% per week. Okay, let me take you back to this Excel. This is going to be like very important. Yes, what is this points column? Okay, you need to know, right, how many points you need to get from Nifty or Bank Nifty. We know, right? Nifty, what do we say, the quantity is 50, the lot size. For Bank Nifty it is 25. So we are doing this for the Nifty. If you look at this, this is for the Nifty. All right, so you should know, to get this 600 points, how many, sorry, 600 rupees, that is 1.5% on 40,000 capital. How many points I need to get? Right, you need to get 12 points. Friends, give some importance to this video. This will help you in terms of deploying the iron condor based on your risk appetite. This will help you basically, right, to get your realistic returns actually. So you need to get 12 points. That's it, friends. If you get 12 points, you will achieve 1.5% on your capital, which is 600 rupees. All right, now what you have to do is, whenever you deploy the iron condor, forget about this buy position, right? Ensure that you are selecting, see, what is iron condor basically? A triangle with buying edges. So first focus on this triangle. So you have to select 13 rupees premium of call, sell 13 rupees call, and sell 13 rupees PE. That's it. Your combined premium is 26 rupees. But what do we need? We need only 12 rupees. But you have received a premium of 26 rupees. So you have another 14 rupees. So why don't we give this 14 rupees as part of edging? Right? We have to convert our triangle to iron condor. Okay, so whenever you go for 13 rupees premium, whenever you sell the call for 13 rupees and sell the put for 13 rupees, to get the edges, you have to have the systematic approach. So you have to buy the edges by giving like 6 to 7 rupees, 7 to 8 rupees, right? Just try to try to see, we need 12 rupees, right? 26 minus 12 would be 14 rupees. Just try to sacrifice this 14 rupees in terms of buying your edges. I'll show you all this example. So what will happen if you do this, right? You will get your customized iron condor in such a way that you will be able to get your 12 points, which is your 600 rupees, which is your 1.5% on the capital of 40,000, and your POP will be huge. Okay, let me take you to the practical session. Until and unless I show you the practical, you'll be not able to understand. So what I'll do, I'll just try to delete this buying wings. That's it. I'll have the naked strangle. This is your strangle. Check the premiums. What did I say? We need to have the premium of around 13. See, again, don't stick to this. Even it could be like 13 to 15 rupees or 10 to 12 rupees. It all depends on how many points you need to capture. This is going to be a very good exercise, and based on this, you can just play around with your iron condor. I'll let you know. Okay. So what we have to do, this is your strangle. I'll just go to until I find this 13 rupees premium. See, I'm just going down. Sorry, this is put, right? A call, right? I'll go. See, now this is 43. I'll just select the strike until I get my 12 rupees premium. So this is matching 13 rupees. What did I say? 12 cities. We do not get the 12 rupees. 13 rupees is fine. Now this is 74, right? So what I have to do? I have to just select the strike until I get 12 to 13 rupees. Stay with me, friend. This is going to be like this is as good as a paid video. See, no one will tell you all this minute details about the iron condor. Every time there is a myth in market saying that iron condor is a strategy wherein we have huge loss and there is less reward, right? Yes, provided you do not put some sort of your thought process, or you do not have the view of the market, and you do not actually know like how many points you need to get from the iron condor. So I'll just explain you each and everything. Now see, we got 13 rupees and 13 rupees. This is my strangle, typical strangle. Okay, profit is 1300, but what did I say? We need a profit of only around 600 rupees. This is what, so 600, so can we sacrifice the remaining 700 rupees for the buying edges? So then don't you think this will become 600, which is almost like 1 point for this. Now this will show you more capital because we have not edge this strategy. The moment we edge this strategy, this will become close to 37,000 to 40,000. Stay with me, friends, stay with me. All right, so this is 1,300. What did we say? We need to have only 600 rupees profit. Now what I'll do, I'll just try to buy the edges with a premium of 6 to 7 rupees for the call side, 6 to 7 rupees for the put side. Okay, let me go to option chain. First let's target for the, this is your put side. We sold a put of 12.95. What I'll try to do, I'll just try to get a buy edges. Maybe I'll buy this 7.75. At times we do not get exactly 7 rupees, right? Maybe we have to just do the experiment. I'll buy this. I'll come to the call side. We sold a call for 13 rupees 20. So I'll buy, maybe I'll buy this 7 rupees. I'll buy this. That's it, friends. The moment you do this, see, the moment you do this, now this is what we are expecting, right? 600 rupees around profit. This is 1.5%, right? Check your probability. Your probability has increased to 92%, friends. 92%. What was your original iron condor? Original iron condor, I'm just opened the same in another tab. This was only 63%, and your customized iron condor is giving you 92%. If you still do not have the trust with 92%, then trading is not meant for you. 92% is like out of 100 trades you will be winning 92% and you will be less losing 8%, and even for that 8% of the trade we have the adjustments. I'm just making this video assuming that we are not doing the adjustments, and I'll show you one magic wherein how to increase this profit. Yes, everyone might be wondering, just 573 rupees for a capital of 38, then this video is not meant for you, friends, because we are targeting 1.5%. So we have customized our own iron condor in such a way that, see, how did we started the exercise? This was your original iron condor which was shown by Sensible, right? Check the premium 74.71. What we did, 12 and 13, right? 12 and 12. Your buying edges were 36 and 25. What did we do? Based on the selling position, we bought it to 7% based on the pure calculations, right? This is a pure calculation. Your sell position, your buy position, right? End of the day we have to get 12 points. I'll show you what is 12 points, right? 12 into 50 nifty. All right, that is your 600 points. I'm just showing you all the practical examples. Okay, now this is your customized iron condor. Do not even give preference for this loss, because look at the probability, 92%, friends, and I'm not even discussing about the adjustments. The remaining 8% we will do the adjustments. Don't you think 4%, almost 5% safety you have on the downside, and almost 3.26 percentage you have on the upside? So nifty is, nowadays the nifty is very volatile. Just assume if you are trading this customized iron condor pre-COVID, when market was very subtle, right? We do not have that much of volatility, but even in this volatility market, 5% for nifty is not a less range. 5% on the downside and almost 3.5% on the upside with the probability of 92%. See the projected return, 1%, right? I mean, maybe at times the Sensible will show, but more or less 1%. But honestly, friends, you will not get this 573 if you are very good at doing the adjustment. I'll show you how you can increase this 573 to 1000 or 1500 also. Okay, but let me again reiterate what we discussed, right? Rather than just deploying blindly the iron condor by picking up random strikes or premium and random edges, that would not work, because 4000 on a capital of 37,000 is 11% per week, which is as good as doing gambling. So you need to have your maximum profit here based on the capital and based on the realistic example, realistic returns. If someone wants 2%, right? See, I'll show you one example, right? If someone wants 2%, right? Go for 25 rupees, this thing, 25 rupees premium, right? What is this? 50 rupees, right? Now see, whenever you go for the 25, you'll get less range, but you'll get more profit, and then you can sacrifice the remaining this thing for your edges. So I'll stay with me. I'll show you this example once we complete. So now this is your typical iron condor. All right. Now let me take. Let's say and friends, we are deploying this trade today. Today is what basically. 1 second. Today is almost your 20. See, let's say you're deploying on 24th, but you should have deployed this trade on 23rd. We have only 3 to 4. So if you have deployed this trade on 23rd, you could have got more range. Okay, so let me get you back to your iron condor. Now let's say the market is sideways for like 1 or 2 days, right? You cannot leave this trade as it is, right? So what we have to do is, like, whenever the market is sideways, let's say it came like 1% here, and then again it came back to center of the market, again it went up 1%, again it, whenever you see some sort of sideways market, you have to start doing the adjustments are very simple, friends. Adjustments are very simple, right? Let's say you are on Monday, right? Monday, end of the day, if you see market stands at where it is, right? Monday is gone, so you have only 3 days for the expiry. So don't you think for the 3 days this 5% is huge range for 3 days? Forget about week. We started with iron condor on Thursday for next 5 days or 6 days. On Monday, if you see the market stands at the same area, right? For the next 3 days, don't you think 5% is a huge range? Right? Can't we do some adjustments? So the kind of adjustments what you have to do is like simple, friends. Do not even touch your buy legs. Do not even touch your buy legs. The only adjustments for iron condor is rolling up or rolling down your call or your put sell positions. I'll show you one magic. What will happen? See, I cannot show you the simulation. I'll do one thing. I'll try to show one simulation after this video, but just for the demonstration purpose, I'll show you how the adjustments work. Let's say market is sideways, right, which is ranging between 1%. So what you have to do is, right, you have to just keep a focus on this profit, friends. You have to just, what you have to say, you have to just exit this 15,000 PE, and you have to just roll up by 50 points. The moment you roll up by 50 points, your profit has increased, right? And then whenever the market, you have to just exit this call leg with profit and then roll down your CE leg by 50 points. That's it, 885. So what is 885, friends? 885 on a 40,000. See, slowly you will be increasing your profit. And let's say again Tuesday when the market starts, again the market stands in the range of 1 to 2%. That's it. You roll up your PE, you roll down your CE. See, your profit has increased. Though we are starting, though we have deployed the iron condor with like only 600 profit, but just imagine what we are doing. We are slowly rolling down the call side, rolling up the put side, and then we have just increased our profit to almost 3% per week, because 600 was 1.5%. What is a double? We have increased our profit to more than 3.5% by just rolling up the call put side and rolling down. But still you have very good safety, 4% safety on the downside and 2.73% on the upside. We are not doing aggressive roll up and roll down. We are just doing the roll up and roll down based on the market view. See, you cannot do the roll up view, you need to have the market view, right? So let me take the epic pen. See, I'll definitely do this thing, what do we say, a simulation. Let's say your market stands like this, right? Your market stands somewhere here. See, when market is going up, right, when market is going up, you can just roll up your this sold position, PE sold position, to 50 points inside, right? When the market is coming down, right, when the market is coming, see, you got my point, right? So basically cannot, if I start explaining everything, I'll just make a video to have like more realistic this example. But the only thing is, like, you have to slowly roll up your put side, roll down your call side. So as and when you do this thing, you will be able to increase your profit. We started with 1.5%, right? We started with 1.5%, so slowly we have increased it to 2% by just doing 50 points. And again, let's say on you are on Tuesday or Wednesday, you have a 4% of this thing. At least you can take a chance by rolling up the P by 50 points and rolling down the C by 50 points. Still you will have 3% of the safety, 3 to 3.5% of the safety market stands here on the downside, and almost 2.5% on the upside. So then you will be able to increase your profit from 2% to 3.5%. This is the way we need to analyze the market. We need to deploy the iron condor, right, based on our risk appetite, by considering all these points, like how many points you want. Let's say you want 24 points, friends. Let's say you want 24 points. So what is 24 points? This would be like 3%, right? 3%. If you are targeting 3%, so you need to get 24 points. So let's discuss about this thing, right? So what is 3%? 1200, right? But for to get the 1200, you need to have 24 points, right? 24 into, what is this, 24 into 50 would be your 1200 points. So now what we should do, you cannot go for 13 rupees, just target for 25 premium. You sell 25 PE and you sell 25 CE. That's it. You got combined of 50 rupees. What do you need? You need only 24 rupees. So you have another 26 rupees. So 13 rupees you go for buying edge and 13 rupees you go for buying edge. That's it, friends. You will get 3% of the 3% what do we say, your returns on the 40,000. Let's quickly do that exercise also, right? Let's quickly do that. Okay, what I'll do, I'll just delete this two things. I'll just delete all these things. Now what I'll do, okay, let me clear everything, friends. Let me clear. Come to one new, this iron condor, delete. I'll just show you for the reference, right? What we have to do, we have to select the strike in such a way that you should get 25 points, right? 25, perfect. Even here we need to have 25. Let me see, right? Perfect. 25 and 25, which is 2543, right? We have not even added. So now what did we say? We have selected your CE and PE by having 50 points. Now we have to go for 13 rupees edges, right? Go to add. You got, what is your edge? First, you got it for 25. So 12.5, wherever you have 12.5, say this, buy this. Go to your call site. We sold it 25. Look out for 12 to 13 rupees. Buy this. That's it. This is your typical iron condor with 1300. The same thing, right? You have 1300, which is 3% of your safety. But the catch is you have less range. This is, see, if you want more profit, you have to sacrifice for the range, right? If you want more profit, you have to sacrifice. Earlier it was showing 4.5% with, what is it, with 13 rupees premium, 13, because less reward you will get. See, check the probability of profit. You have from 92%, it came to 85%. If you want more profit, your POP will decrease. All right, your range will decrease. If your expectation of profit is less, your range will increase, your POP will increase. You have seen both the examples. If you look at this example, you are getting only 3.34% and 2.71%, but earlier we got almost 4.9% and 3.5%, because we had a bigger safety with 1.5% expectation, like this. As and when your profit keeps increasing, your range will decrease and your POP will decrease. Okay, even this is okay, friends. Even this is okay. Honestly, I'm telling, even 3%, but still 3% is 144% per year, friends. 144% per year. This is as good as gambling. So try to have realistic expectation. If you look at the big players like FIS and all the big players, they have 1% to 1.5% per week. That's the reason they have 70 to 80% of the success rate. 70 to 80% of the success rate. If you go for 1%, this would increase to 80 to 90%, because you're very safe. And with the kind of adjustments what we do, I've shown you, right? Let me show you one more time the kind of adjustment. Simple, friends. This will work as good as even if you're not doing any adjustments. And if you start doing the adjustments, what did I say? You have to roll down. See, check this profit 1000. If you roll down your call and roll up your put. See, your profit has almost doubled out, but still you have good safety. Friends, this is not, if you're not, see, I've made it very easy for you guys to understand by having this Excel sheet, by showing you like how many points we need to have. Until unless you have this calculation in your mind or drafted somewhere in the Excel, and now don't ask for this Excel sheet. This is pure common sense. This that's it. We do not have any. See what I've done, I've just put the capital, no formula here. I've just put the percentage, plain numeric number. The only profit is, this is the only profit, that's it. What is 3%? What is 3% on 40,000? That's the formula. And what I've done, this formula is 1200 divided by what is the Nifty size, 50 quantity. If it is like Bank Nifty, go for 25. That's it. And this table is pure plain table, right? These are all mathematics, and this is like sum. I've just added sum. Right? I mean, I can see some people asking the Excel. This is not a rocket science. This is a pure mathematical calculation. That's it. I will not even say mathematical calculation. This is pure your own risk appetite. If you want 1.5% profit, right, based on this thing, go for these points, right? You have to cover only how much point? You have to cover only 12 points, right? That's it. You have to cover 12 points, 1.5, sorry. See, make your Excel sheet, right? If you want, I can just make the Excel sheet. I mean, based on the percentage, even all these things can get auto calculated. I'm just making this video by just taking the Excel. Or else you can do, the moment you put 1.5, it should show you the percentage, and also it should show you how many points you need to capture. And also based on this, it should show you, look, I need to cover only 13 points here, 13 points here. I have to just go for 7 points here, 7 points here. Everything should be auto populated whenever I give the percentage. Let's say if I'm giving 3%, automatic, the way this one is getting calculated, even everything should get calculated. That would help you basically. So I think that would help only for 1 or 2 trades, because everything should be in your mind. Alright friends, so where are we? Let me take you to this. So that's what customized iron condor, right? This is one of the wrong myth in the market, saying that iron condor will give you more loss and the reward is less and the risk is high. Yes, definitely, provided you are just deploying random, you're just selecting random strikes, you're not having your realistic expectation, you do not even know how many points you need to get to achieve your 1% or 2% or 3%, right? If you do all these calculations, things would become very easy, and this is what the big traders will do. All the majority, I would say 99% of the retailers, they just run for the profit. They do not look this profit. Let me show you. Let me again get it to, right, let me get it to last, one more try friend, last, let me get it to 1 second. This is very important. They don't give importance for, right, they don't give importance for the actual profit. They give importance for, I'll show you. Okay, this I would say, 1 second friends, right? See, they do not give importance to, see, I'm just taking 378, they give importance to only this 4168. What I mean to say is like 378 is less because I need to adjust this strike. You have to have the profit based on your expectation. This should be like 600 or 700, but not 4168. If you deploy this kind of trade, definitely you'll end up messing up your trade, because the probability of profit is only 63%. But check the probability, 94%, and you have your adjustments, right? You have safety. See, 4.82% safety friends, and you know how to increase this profit. Start with 1% profit, slowly, gradually you have to increase your profit. That's the way the smart traders and the big players will do. If you adapt to this trading system, right, then no one can stop you from getting good profit from the market. When I say good profit, don't target for 144%, target for 48%. Even 48% is huge, but still I'll just leave it to you, because you'll not get this 48%, right, out of 4 weeks. Even if you win like 3 weeks, so maybe the realistic would be like 22% to 30%, which is very huge. If you are considering the compounding interest, you will be able to create the wealth. And one more thing friends, one more thing, let me show you. Just because I'm just showing it you, with only one lot, right? This, let me say, if I'm just increasing the lot, let me say I'm just increasing the lots, 10 lots, right? You have a profit of 6,350 with just 3,85,000. If I'm just increasing it with 100 lots, check, with 38 lakhs you are getting a profit of 63,500 with a peace of mind, right? If you have a very good capital, 63,500 in a week of time with a capital of 38 lakhs. And let's say the big players, let's say they're trading with 500. Yes, no doubt they'll play with crores. This is huge. Let me show you with 300 lots, right? See, 1 cr capital, you will be getting almost close to 2 lakhs profit in a week with 1 cr capital. With a peace of mind, that 93% is your pop. Friends, do not look at this, right? Because you have safety, and whenever you have that, what do we say, 3%, you expecting 4.5% gap down, right, for you to see this maximum loss? No, right? Even if it opens somewhere here, right, just exit the trade and deploy a new iron condor. All right, this is what I meant to say, friends. So just try to understand what I'm just trying to explain you by having this excel and everything. This is one of the, I would say, like one of the paid video, just because I am doing this video, like people will not give more importance because I have only like 500 subscribers. But let's say if the same video is made by so-called big traders, like people will tend to give more importance. So friends, everyone, all the good traders, the big traders have started with zero. Just try to have trust in my analysis also. If you feel like I'm telling you something wrong, comment in my comment section. All right, I've just put on my all the experience. I'm just trying to help all the retailers, especially those retailers who are like very conservative, right? I'm just trying to help them. All right, thank you, friends. Thank you for watching my videos. Please subscribe my video, like my video, comment my video, and also please share with your friends, especially for those who are just starting the journey into the trading. All right, thank you, friends.